Hi, I'm Monique Hom of Real Estate Investor Goddesses, and today I want to share with you something that a lot of people don't know. The really amazing tax benefits that people get when they become real estate investors. And these are great tax benefits that you won't find when you're doing other types of investment for the most part. So, one, depreciation. This is a really beautiful thing that allows real estate investors to save a lot of money in taxes. So depreciation is this principle that over time the value of an asset will depreciate or lessen. So, and this will happen with, say, a car. You buy a car and you drive it off the lot and it loses some of its value, and as you keep driving it, it loses value. If you've bought a car for your business, it definitely is depreciating because the value of the car is lower. A house or property doesn't really work that way, but for tax purposes, it does. So you buy a piece of property and you can take every year a depreciation. This, basically it's saying that the property is losing value, even though for the most part, real estate gains value over time. But for tax purposes, you get to take a deduction because of depreciation. And what's doubly nice about depreciation and taxes for real estate is that you can take depreciation on the entire cost of the asset, even if you've only put in a little bit, right? So say you put in 10% to get a $100,000 house, you put in $10,000, the bank is giving you a $90,000 mortgage. You've only invested $10,000, but you can take appreciation on the whole $100,000. So you're able to take depreciation on other people's money. Another great thing about real estate and taxes is that your cash flow on your real estate is taxed at a lower rate than other types of self-employment income and or regular employment income. So what that means is, say you have a job where you're taxed at, you're making $100,000, you're taxed at the highest tax rate, but if you're going to be taxed at, I don't know what the tax rates are right now. I should know, but say it's 30%. But if you have real estate income, so you have buildings and they're giving you $100,000 of cash flow, that income that comes in as cash flow is going to be taxed at a lower rate. Even if you have a second job on the side, you're doing Etsy and you're making, like you make $20,000 on the side selling scarves on Etsy, and you make $20,000 in income from cash flow on an investment property you have, that Etsy money is going to be taxed at a higher rate than the cash flow from the real estate. So that's a really great benefit for real estate investors and taxes. A third really great benefit is what my CPA calls grateful expenses. Calls them grateful expenses because you're grateful to be able to deduct these things, because they're things that you would probably be spending on anyway. But because you're a real estate investor, you can move those expenses from that personal non-deductible bucket into a deductible bucket. For example, you have a cell phone. Everybody has a cell phone these days. If you are investing in the stock market, even though you probably used your phone to call and get into your stock deals, you can't deduct your phone because of your stock investments. But if you have real estate investments, you have this side real estate business, and you can deduct expenses from things that you would use, that a real estate investor would reasonably use to conduct their business. So cell phones, computers, home office, travel, to find properties to to visit, education, taking, say, an investor out to dinner. All of those things are deductible business expenses in that you get to take because you are a real estate investor. And you don't have to have an LLC or corporation in order to be able to take those. You can take them even if you're a W-2 employee and you're doing this on the side. So those are some of the amazing real estate amazing tax benefits that you get from being a real estate investor. Let me know what you think, share in the comments, and subscribe for more videos. See you next time. Bye.